do you look at the long-term pattern, or is there a catalyst? I know the catalyst should be important for you, or
Well,
how
yes,
can you
but
be more?
the bubble's already happening
Mhm.
when you see a bubble. I mean,
Yeah, yeah.
you can't, if you can see a bubble in advance, you're going to get very rich. Then you
Yes.
can buy it before everybody else, and you will get extremely rich if you get out in time. The best people in a bubble are, somebody who's 25, 26 years old. They don't know about bubbles. They think this is normal. They think they're very, very, very smart, and they can make a lot of money. Now, an old guy like me would say, come on, this is insane. But 26-year-olds, they've never seen it. They think they're smart. They think it's beautiful. So in a bubble, you need a 26-year-old. But when the bubble's over, you better not have a 26-year-old, because the 26-year-old is going to lose everything for you.
Yeah.
But the only way I know, you can read about them, you can go back in history. There have been many bubbles, many people have written about bubbles. So just learn about them. They're all the same.
Yeah. So we should spend fair amount of time when we learn about investments to study history and study the psychology of bubbles. I think that's very important. And I quote from you because the more certain is something, the less likely it is to be profitable. It's one of your famous. And how do you know when it's time? And it's not too early to jump in? Because yeah, of course, if you know it will be a bubble, then it's less and less certain, and you can make more and more money. But how do you know? You look for a catalyst.
You watch Financial Fitness. They will tell you. No,
Okay.
as I said, all bubbles are the same. You see people leaving their jobs, leaving their professions to go to the investment world. Everybody believes you go to the doctor and the nurse wants to talk to you about the stock market. Everybody wants to talk about you go to a restaurant and they have the television on watching the stock market. It becomes a mania. They all look the same. Uh, the signs, you just have to be alert. Be alert to them. And stocks go up every day, or whatever the bubble is. It could be commodities,
Mhm.
whatever it is, goes up all the time. If it goes down, people rush to buy more. It always happens. But again, I want to remind you, Peter, all bubbles pop. All bubbles have always ended badly. And please be aware of that. There are bubbles, they're recurring. Understand them.
Yeah. And I think what you talk about is not predicting really the future, because you can't exactly do that, but preparing for the future. You can know, and it's something from Howard Marks' memo, that it's not about really uh, predicting the future, but you can look at where we are in the cycle, and you can decide, do I want to take more risk or less risk? And that's how you play it, something like that, or
No, I'm not that smart. I just, when I find something that is where I see something cheap, where there's positive change taking place, I do some research, and if it's cheap, I buy it, and then I try to own it as long as I can until there's a new change that's negative, and then I hope I'm smart enough to sell it. No, I don't think about cycles and things like that. But usually, if speaking of a cycle, if things are depressed, you're in a down cycle, and there are a lot of things that are cheap. But no, I'm too simple. I just try to come across things that are very cheap, and where there's a change, and then I buy it. Or if it's very, very, very expensive, I will try to sell it short.
and how do you define cheap? Is it that you can buy $1 for 50 cents, or
Well, those are taglines that people use. I mean, if an industry has been losing money, and all the stocks are bankrupt or nearly bankrupt, or haven't done anything for years, that's usually a sign they may be cheap. They probably have low PE ratios or low book value ratios, things like that. The situation will tell me. just because I see a country that was nothing has happened, and that it may mean it's cheap, but that doesn't mean you should buy it, because it may stay that way. It may
Yeah.
stay that way for a long, long time. You know, if you'd invested in Hungary in 1956, it was cheap, but you didn't make any money. Nothing happened for a long, long time.
Long, long time. Yeah.
You have to look for something that's changing, that's positive. It's the change which will help make you a lot of money. Fortunately, if it's cheap, and you're wrong, you're probably not going to lose too much money. But if you get it right and there is a positive change taking place, you might make some money.